Welcome to Season 4 of the K4 Business Podcast.
From an audience perspective, how can small business owners and investors tap into the power of tokenization to raise capital, build trust, and grow faster in a digital economy? That's what our guest will unpack in this episode, how tokenization is changing the way assets are owned, traded, and valued. He'll break down complex ideas like blockchain, smart contracts, compliance into simple, practical insights any entrepreneur can use. Our guest today is Neil Williams. He's the Chief Operating Officer at ElastaLink, a driving force behind the company's rapid growth and innovation in AI, machine learning, blockchain, and fintech. With a career that bridges entrepreneurship, corporate leadership, and academia, Neil brings a rare balance of strategy and execution. He's raised millions in capital, guided companies through IPOs, and opened new markets worldwide. As a strategic advisor for Raise FinTech, he helps businesses harness tokenization and digital finance to scale globally. A past founder with multiple successful exits and a member of Canada ASEAN Business Council. Neil also teaches as an adjunct professor at the University of Ottawa and Carleton University, where he shares real-world insights on global trade, entrepreneurship, and digital business strategy. Blend of street smart innovation and academic depth makes him a sought-after voice in shaping the future of international business. Neil, absolute pleasure having you here today. Thank you so much. And do you have your favorite quote or saying, sir?
Yeah, first of all, thank you guys for having me. I'm really excited to do this with you today. And favorite quote is, and this is one that I thought would be interesting today. I mean, for students a lot too, but individuals do not invest into ideas necessarily. They invest in a team's ability to execute.
Excellent. So tokenization, what the heck is that? It sounds like something like Tolkien, maybe Lord of the Rings, but
Yeah.
it's not. What is tokenization?
Of confusion in the market, especially if you're not immersed in what tokenization is. So I thought it'd be a great thing to start off by talking about it in layman's terms, in a sense. It's converting rights to real world assets, such as real estate, bonds, art, shares in the company, into a digital token. And that digital token is held on what's called a blockchain. And the token represents value, ownership, or investment claim, and can be transferred digitally, essentially. So that means it can be moved, between the organization or the thing that you're investing in and to you directly and very quickly in a digital fashion. And it's like buying shares of a property, but with much smaller units, and it's easily transferable. So, it's the same principle as buying a stock, but faster, more flexible, and supported by modern infrastructure, and also regulated in the same fashion.
So the old way of doing paperwork, you go to a lawyer and they say, listen, here's your deed to your property, or here's your business, or some other, bona fide approval process. And now we're kind of skipping over into an electronic world. And I think some people might have a hard time grasping. So I can see the paper there. I can see the hard asset there. How does the electronic piece come into this? Like, is it a card? What is it? What is the tangible thing that you hold in your hand? But what does it also mean, and what improvements does it offer?
Yeah, so I mean, the token itself sits on what's called the blockchain, right? And that's essentially a digital ledger. So mutable ledger, which means it can't be changed at time. So what you're receiving is a token represents a contract. So it's basically an electronic contract or whatever it is you might be purchasing. It's exactly the same as the traditional fashion, but it's just built in an electronic way. And that is sent to you very quickly. And we'll go to that a little bit later. But there's no difference between the traditional way and the new way in terms of actual corporate structure, realities, and whatnot. And then once you have it, you hold it in a wallet, a digital wallet, for instance. And if it's ever lost, there's the ability to burn that and reissue it. When I say burn it, they can dissolve it, like make it disappear, and reissue a new token if it does happen to get lost. And all this accelerates the process greatly. But think of it as a contract that's the same that would be written up in a business deal, for whatever you might be investing or purchasing, and has the same legal ramifications, but it's all done in a digital fashion and sent to you directly. So it's a fast and very secure way of doing transactions, but comes with all the same legalities built into it as the traditional.
So when you say it's immutable, for example, if I were to print out, or the original one would be the person writes something out and then they take a stamp and they emboss the stamp in a document to say, yes, this is the original document, right? How do you ensure that? But also, how do you know that the document you're receiving is bona fide? In other words, it's not an altered copy.
Yeah, that's a great question as well. So, in terms of the process that the traditional document would go through, it goes through the same process in a sense. So it's going to be verified by legal and whatnot, and it is a full contract. But much like if I was sending you a contract via email, and then mutable, what that means is that it's the records for blockchains are clear. Blockchain is a digital ledger, like we mentioned, and it's where transactions are recorded, just like a traditional ledger, and it's transparent and it's shared. And it provides the infrastructure for tokens to exit, exist, and transfer secure. Um, Tokenization uses blockchain for a particular reason, so that ownership can be tracked and transferred the same way a traditional agreement would have been done. And it's done more easily without as many intermediaries. But the records of blockchain are, multiplied and kept in various locations around the world to simplify. And so you can't go back and alter anything in the blockchain. You can't, like in a ledger, you could go back and you could change, and edit a ledger. But in the blockchain, you don't have that ability to do it. And that's, sort of one reason why, because, the regulation in terms of allowing this to happen came quicker than before and expected. And in terms of, doing an audit or whatnot on, that ledger, it's a much faster process too. So that's sort of a high level there, but I think, we'll go deeper as we go through this conversation. Does that answer your question?
Yeah. So, do you have any examples of real businesses that are using tokenization right now?
When you think about it, there is, there's, in terms of asset classes and whatnot that are using tokenization, there's quite a few. So real estate one is quite large. Funds, investment funds is another sector that's fastly growing into this ecosystem. And then you have things like non-tangible objects, right? So something that is like investing into a company. This is widely adopted already. And then you have tangible objects as well. So it could be, when we say real estate, to go a little deeper on that one, it could be a building, for instance, where you're getting fractional ownership, you're investing into that building, and it opens up to, a much broader market. And also, I think we'll talk about that a bit more too as we go. So it's a lot of automation involved here, which allows these processes to go much faster in that way. Securities and real world assets, and there's secondary markets for this too.
Someone says, "Hi, here's my token." How do I read that token? Because at one point in time, someone says, "I've got a token. This is my bona fide." And if the old way would be, you look at the paper, you read it, or you give it to your lawyer, and they read it,
Mhm.
right, to sort through it. What's the difference between doing paper and what you can visually read, and a token's given to that person? How do you do that next step physically?
Yeah. Okay. So, like, we'll say for everybody is, I'll back that up a little bit too. And then, just to give a greater understanding here in simple terms. So, you know, uh, tokenization in regulated markets, which is what we're addressing here today, is more about capital formation, liquidity, asset management, and it's not purely trading or speculation in any way. And it helps reposition the topic of a business infrastructure and how these transactions are done, rather than sort of a hype that you might hear on the other side of this market. So traditionally you have that heavy paperwork side. You have long legal compliance cycles, and you have manual transfers, and you've got a lot of intermediaries. And when you have that many intermediaries, you're definitely driving the cost up of these types of transactions. and slowing down the transaction itself for you to receive that particular contract. And again, it's a smart contract. You need to think about it that way. So what that smart contract really means is it's just not paper, it's digital and secure and recorded on the blockchain, like we said. And that is the ledger. Uh, you know, typical deals might take weeks or months, due diligence, investor accreditation, asset transfers, settlement. The costs increase, like we said. So there's many layers of service providers in a traditional fashion. It's sort of an opaque workflow. And few people outside of large institutions really understand or had easy access to doing so. So, this changes things quite a bit in terms of how these deals are done. So, if you're familiar with a traditional investment or you're familiar with buying a piece of property in the traditional fashion, there's no change to the regulatory atmosphere. It still has to abide by all the same rules that the traditional approach does. But what happens here is you're able to accelerate the process quite a bit. And you're able to potentially buy into investments that in the past required a larger capital investment. So you have an opportunity to go in at a lower rate, which broadens the market of people that can actually invest into various types of projects. So it opens it up to quite a bit of a larger market locally, nationally, and globally, which also accelerates the process of investment or whatever it is that you're trying to tokenize and move into the market. So it's really it's the same traditional process that we've always had in a much faster format, a much more secure format, and with less costs associated in the transaction along the way. That's your question, Maria?
Yeah. One part though is how do I read it?
Yeah, that's right. So you have the opportunity to sort of unlock this token and see what's inside it. So inside that token is a contract, and it is developed in the same way a traditional contract was. And is, but it's just loaded into a token, which is actually the vehicle that moves that contract around in a secure fashion.
Would it be safe to say then that it's like a Word document that's encrypted and there it is, but there are parts of that Word document then will feed out and do certain tasks when that token's plugged into something?
It can, for instance, there's different types of tokens, or if we want to make it more simple here, there's different types of transactions that are going to be done. For instance, if your contract could stipulate that you're receiving a dividend, and then that dividend would be paid out by a company, and so all those detailed pieces of any type of investment, how the investment structure works, is all logged into that token, recorded, and thereby can be automated by the company that you've invested in or whatever it is that you invested in. And so all the terms and key terms that are within that contract will be honored in a more. And so what you get here is a much faster transaction process and a more automated transaction process. So again, it has to follow all the same legalities. But for instance, if you had invested in my company, you're entitled to a dividend, that would be automated and easily transferred over to your accounts based contract and the terms of the contract, which is within that smart token.
Excellent. Are you finding then that larger firms, BlackRock, JP Morgan, this is something that they're swinging into as opposed to, oh, hi, here's some paperwork and, you know, uh, two filing cabinets later, you're off to the races?
Totally. There's many big players in this market and are coming through. And, the couple that you mentioned, there were some of the early BlackRock capital in terms of investing and starting to utilize this technology heavily. So, they really see the value in digitizing assets and reducing the settlement risks along with that, lowering costs and being able to expand investor access across the board. Yeah. Forecasts have shown exponential growth. Like in this market, it's incredible. And one report estimates tokenized real world assets will hit about 30 trillion by 2030. And even at that, that's a stat that is probably 4 or 5 months old now. I you know probably guess that it's actually surpassed that number now in terms of the forecast. So it's becoming more adopted, and there's a lot of people that want to be first movers in this market. And build infrastructure rather than disrupt it. But at the same time, in terms of the legal parameters and how this is done, it came faster than I think most of the market expected. So those that were prepared have been capitalizing on it ever since. And especially in markets that are really adopting these types of transactions like real estate or investment funds. And I think we'll start seeing, all sorts of other markets that these companies deal with and financial institutions deal going the way of tokenization, digitization.
So what I'm hearing is that it's secure, a secure transaction, secure proof of it's bona fide. Does it also save time and money?
All segments benefit here. Okay. Large institutions gain efficiency and new classes. Mid-tier funds get access to better infrastructure, and smaller enterprises, even real investors, can participate through fractional ownership. When fractional ownership just means you're buying a smaller portion of whatever it is that you're trying to buy. It's a real world asset, such as a piece of real estate, or if it's an investment in a company. So the business model is shifting dramatically, and it's not just about large players dominating and infrastructure. It's becoming scalable and accessible, which leads into sort of a democratization of these transactions are done and who could access them. So it's really opening up a lot of markets and allowing businesses to capitalize on those markets that they may not have been able to before. So you're lowering costs, you're expanding investor access, and at the same time, you're putting different products on the market too that potentially weren't available to invest in before, and especially in a traditional manner. But again, all with the same sort of regulatory pieces involved in terms of how these transactions are done and what needs to be done in terms of terms and agreements.
So smart contracts and the enforcement of contracts. How does it do that automatically? It almost sounds like there's a bot sitting around the corner going, you shouldn't, you gone left. It's almost like the lane assist driving with a car. It says, hey, the little vibration, get back in the middle of the road. How does that work with the tokenization?
Yeah, so I mean, from a high level again too, because I really want the listeners to understand, you know, how this all works, because it is something that it can seem complex, but when you really look into it, there's a lot of complexities, but it can be definitely understood in an easier fashion. You know, let's talk about a little bit about the regulated days of crypto, and then we'll lead into how tokenization speed operates in highly regulated markets, because I think these two pieces are really akin to each other. So in the early crypto sort of era, you had a lot of speculation to what would happen. You had lack of regulation quite a bit, and you had a lot of fraud risks. And they weren't even really working in these particular markets that you have access to now with major financial institutions. So today's tokenization platforms in regulated markets include full plans, like we've been saying, right? Investor protection, oversight, all the key components that you would get in a traditional investment. And so this is not the Wild West anymore of what crypto used to look. This is infrastructure for regulated finance. Major financial institutions across the board adopting these technologies. And so, the next thing would be, as you said, Bernie, how does this operate? And how does this work within a highly regulated environment, for instance, under the same rigorous standards that, are enforced by the SEC? For tokenization platforms themselves are aligning with security laws. They have KYC, they have rules for investor accreditation and requirements that were always traditionally in place. Those continue forward. They're just done in a fashion now that's a much faster way to accredit and bring the investors on board into that atmosphere, but they still have to go through the regulatory hurdles. So, when you think of regulations like U.S. Securities and Exchange Commission, they're increasingly addressing digital assets, looking at these frameworks and making sure the token issuance, which again is your smart contract, abides by addressing the existing financial rules that are already in place. So again, it's really just optimizing, these transactions and doing them in a fashion that benefits everybody at the end of the day. You're reducing costs, it's much faster. It opens up the market to all sorts of different people that may not have been able to invest before. It also raises capital for these companies and um, whatever is being sold at a much higher rate. So, it's really accelerating the economy if you think about it that way. It's accelerating investor access and it's accelerating the ability to access investors. Um, and so, if you just think about that on a grand scale, if this can really succeed the way it is, and it's going to, you're going to have an economy that's more balanced. You're going to have a global economy that's more balanced. You're going to have individuals that have access to things that they would never. You're going to have lowering of costs, and you're going to have the acceleration of companies participating in the market. So, all very positive things, but then also all done in a regulated fashion. And so, again, it is a market when you think about it that is not in a certain way. It is just it is making that market much more efficient in terms of how it operates, I would say.
So a couple of things come to mind. What I'm thinking of is if let's say I'm in Europe and I want to buy property here in Canada, or the opposite way around. Does the location matter? One, and I know that the compliance is part of part of the process. I can't get, if I were a lawyer and a lawyer in the province of Ontario, I can't give any legal advice for the U.S. or Europe, elsewhere. I can only do it in here. But is it as easy as that? And if that is so, how do I know that that token that I'm dealing with is legitimate? So if I'm from overseas and I'm talking, let's say, to a common acquaintance we know, Fred, who does real estate investing here, how do I know Fred's bona fide? How do you cinch that last mile? This I'm assuming this is to build that trust so that doesn't matter where you point it. It's yes, it's check mark good.
Yeah, well, that's an excellent question too, because that's a key concern for a lot of people looking at this market and trying to understand it. In my previous answer, I was talking a little bit about KYC and AML. So before I dive into the answer to your question directly, Renee, I wanted just to say, what KYC and AML is, for instance, and that verifies who is investing. Okay, and it prevents money laundering, fraud, and it's an accreditation to investors to meet the minimum standards, uh, protects less experienced investors. And so, what we have here is smart contracts, regulation, which helps automate these processes and embed them into the issuance and transfers, reducing the risk over for everybody involved in that transaction. And again, this process existed before, but it would take much longer to conduct without tokenization first. And so this, at the end of the day, builds trust for all participants, the issuers, the investors, and the regulators. And smart contracts at the end of the day is a key part of this ecosystem. And so, how do they work, and how do they enforce that trust? And what's going on a global sort of scale as well? So, highly regulated markets and jurisdictions are areas of protocols and whatnot that still need to be upheld. So yes, I mean, if you're investing into a piece of real estate and using the token system to acquire that real estate, or you're investing in a real estate fund, for instance, like a REIT that holds a lot of properties, you still have to follow the regulations of that nation and that highly regulated area and the transaction process that would happen between two nations. So really, if you're buying into another nation, it's still going to be a regulated jurisdiction, for instance, it may be, and you still have to follow that protocol. So smart contracts at the end of the day is protocols on blockchain that execute predefined conditions, right? So payment triggers, dividends, like you said earlier, ownership transfers, and again, they reduce the need for intermediaries. They automate the compliance part. So you won't be to affect that transaction unless you meet the compliance standards. Like we said, KYC, AML, and what. So, what happens here is these rules are built into these smart contracts and these transactions as well. So fewer manual processes and less risk of error or manipulation at the end of the day, and faster execution, all in a regulated fashion, no matter what the regulations may be and no matter what the jurisdiction may be. So, it's easier operations, lower overhead for businesses, but with the idea here too is that it's still compliant, it's still secure, highly secure. Uh, and a lot of these types of transactions, now you're seeing some of these major financial institutions being quite involved. So you could use a trusted financial institution, and we'll see many more coming on board to execute these types of transactions as well, in which may, at the end of the day, uh, make those that aren't so familiar with this market feel a little more comfortable transacting it from the get go.
Perfect. So let's say I'm not investing in money, but I have a contract with somebody. Apply me 10 widgets a month as part of my supply chain, et cetera. Although you have EMC and KYC to help, for investing, is there some sort of regulatory body? Is there some sort of someone shows up, hi, here's a token. How do you know that in that instance it's good to go? Is it a process where you'd shop like anything else to say I needed something from China from a company, and then okay, here's our token, and you take it here. Do you have your lawyer look it over as you would with any contract? Who provides that oversight to make sure everything is the way it should be? Compliance issues too, but also at the same time you're happy with the contract you're about to engage in.
Yeah, that's an excellent question as well, because people are always concerned when you're explaining this market to somebody for the first time, and it could be very spectacle in terms of is it actually compliant? I'd almost rather my piece of paper at the end of the day. And what you need to do when you're thinking about this is, if you're an investor or you want to get into, starting to transact using these systems, you need to understand, the asset. Is it, what are the regulatory implications? You know, you need to find a compliant platform or somebody that has a good partner or reputation, has proven track record, like we said before. For instance, JP Morgan or BlackRock Capital are in the game, and there's many more as well. So that might make you feel a little bit more comfortable too. And you can ask about the regulatory, right? Investor projections, liquidity, and I would say so start small, or fractional sort of investments, so to get to understand it really for yourself, and then stay informed. All the industry reports, regulatory updates, at these types of things, which is very easily accessible now because this market is growing and accelerating tremendous. We'll talk more about this, but it is going to be essentially, many believe, the future of finance. Um, and the new standard for asset classes. It is an area that's not going away. Put it that way. It's like, you remember when you first got a debit card, for instance. I can remember my grandparents being, extremely skeptical about a debit card and a bank machine until they, used it a few times, and they're being offered by an institution that they know and have dealt with. So, that's sort of akin to what we're doing here. A little bit different in terms of what tokenization is, but in the grand scheme of things, it's a new product that's coming and is going to be widely adopted.
So if I'm going to the grandma and grandpa model, I know that, I need a bank card. That means, any card won't do. I go to my bank and, because it's associated to the accounts that are mine.
Mhm.
Who do you go to get a token then? Say Bernie wants to start a contract with somebody and I need to create a token. What do I do next? Like literally, what is my next step? Do I pick up a phone and go, so Neil?
And that's a great question too. So, there's a lot of organizations out there. You mentioned Raise FinTech, which I work with as an advisor. So you need to understand if what you're trying to do is something that is should be tokenized. That is an asset class that benefit from a tokenization process, because there are those that may not. And from there, you know, what are my options? So, a company with a good reputation, such as Raise FinTech, a really good team that has had a lot of success issuing tokens, and they have all the uh, pieces under one roof, such as, compliance, regulation, issuing, and everything that's involved in that ecosystem to transact would be something that you'd be looking at first. And so, if you were, for instance, if you were saying, I'm going to sell shares in Vermi Inc., um, that's a business that would really benefit raising capital through a system like this. And it opens up to a broader market. You can do it a lot faster. And also, a lot of these processes are automated. So the investor, you know, ends up with we'll call it in the traditional model, you would end up with a share certificate. Here you end up with a smart contract which represents that share certificate. In a traditional model, it might take months to close and for you to end up with that physical share certificate. In with this model, it could be done in a matter of hours, no matter where you are in them. As long as you meet the compliance standards to be an investor and meet the compliance standards to sell securities.
So with the bank card, I know the bank makes a percentage of each transaction, depending on your account, and so forth, even overdraft. How does tokenization generate money for the person who creates the token, or is the source? It may be something that I'm looking for to have people invest in Bernie Inc. Do I talk to my bank and they make a percentage off each transaction, or raise in this case?
Yeah, I mean, there's different models for different asset classes. So depending on what your asset class is, there might be different fees associated with that. There may be consulting fees to set that organization up in a fashion that it's ready to transact in tokens and traditional matters as well. So you don't have to pick one. You can still operate in a traditional manner and also in the newer manner. Typically, right off the bat, there's probably a fee for creating each token. So there'd be a tokenization engine that does that. There may be consulting fees up front. And then there's the distribution of dividends and the movement of those tokens, right? So if you have a share, for instance, it's a token, you might want to sell that share when it's applicable. So it has to actually be transferred and moved. So there's different models, uh, but and then some of them are similar to the traditional fashion in terms of monetization and how these transactions make a profit for the companies managing them. But typically the costs are significantly. So if you're a financial asset class or an asset class that would benefit from tokenization, you're typically saving a significant amount of money than doing it the traditional way to offer to the market. Uh, and that benefits the investors as well. So, it's, you, you don't need any intermediaries. You can automate the compliance and the distribution, like I said, fewer manual processes. And depending on what it is that you're bringing to market, there'll probably be different fees associated with that particular asset class and how it's brought. To answer your question,
It does. We're talking about what's happening now. How do you see this rolling out in the next 5 to 10? Is this going to be so prevalent that the paper and the applying the seal to the paper is going to be something that's in the archives of, I think, the 1300s? You had scribes doing this stuff, as opposed to boom, here's the token, and where it's a simple contract between two parties and just doing the compliance for the contract. What do you foresee in the 5 to 10 years coming up?
it, it's really revolutionizing the market. And, we've always talked about in the past global markets, right? Especially with the advent of the internet, email, communications, global communications and speed, it did sort of open up the global economy, so to speak. But this will take it to the next level. So you'll have faster settlement, real time or same day settlements, um, greater access to asset class with less investment and more fractional ownership, meaning that you can buy a smaller piece of something that you may not have been able to before. And by offering it to a broader audience, It means that the issuer, the individual offering whatever it may be that people are trying to buy, for example, a small piece of a building, uh, will accelerate that funding requirement for the vendor. Yeah, and also, as we said, allow access to investments that traditionally you might have to be wealthy to invest into, or wouldn't have access to it unless you had a certain amount of capital. And then so again, you've got a global investor base here that will run 24/7. So you have markets running all the time, you have more transparency. And when it comes to the traditional intermediaries, for instance, they're going to either have to evolve or reduce, or they're going to create new services to help facilitate this market. So, we've seen that, we've seen it coming, and we've seen a lot of adaptation, especially since the regulatory framework really came in and people are starting to trust these transactions. So, at the end of the day, businesses will probably end up treating a tokenization as a standard part of their capital strategy. Um, so it's just adaptation, like we said, of how things are sort of traditionally done, but with lots of different features and lots of different implications on a global.
Just flipping it around just slightly, what is how does it prevent a scam from happening, being perpetrated? Or do you see, are there any way for this type of approach to be spoofed? Because I'm sure as something gets built and it has good strength, someone's going to look for that weakness. I guess what I'm hunting for is what should be a flag for somebody if they're seeing something, this is sketchy.
Yeah, in all markets, any market, whether financial or not, that's growing rapidly and is newly regulated, there'll always be risks. First of all, I would point to what is the regulatory framework in that particular area that you're looking to invest in, or region. Um, what kind of companies are operating in that? Is it financial institutions? Is it mostly private companies? And do they have the necessary documentation to back up the assets that they're selling? Are they associated with clients pieces that you would generally expect from an asset class like that? So again, the financial rules, the regulation, understanding if these entities affiliated with a traditional financial institution or not, they don't necessarily need to be, but are they providing the correct documentation? And in some cases, uh, if you're really interested in investing in a region that you're, or even in a company through a company that you're not 100% sure about, my advice right away would to be to consult a lawyer to do some research and understand the reputation and also the compliance level of these companies, and ensure that you are not taking too much of a risk. And maybe what you can do is do a smaller investment to keep yourself in a safer position after you've done your research, and potentially use a lawyer that specializes in that field but is able to verify. Uh, I think financial institutions will get there at some point too, but they're in the game already, financial institutions, so they're going to want to take your business anyways. Yeah, in a regulated manner. I'd say the more on the regulation, the reputation, the market, and then what the market's been showing in terms of trustability. So, there's highly regulated markets and there's markets that are much less regulated, which exposes you to more risk.
So, Neil, if someone says, "Listen, I want to understand more about tokens. I need a token. I'm about to go on this venture. I'd like to have a token set up for this." How do they reach you?
First of all, you can look me up on LinkedIn as well, Neil Williams, MBA Canada. And pretty easy to find. But also, you can feel free to send me an email directly at N Williams. So that's NWILLIAMS at ElastaLink. ELASTALINK.com. And whichever avenue you think is most efficient. And you can check us out too you can check out the ElastaLink website, message me on LinkedIn, or send me an email. I'd be happy to address any questions you might have, and even have a conversation. Just generally speaking, I think it's really important for the listeners here to really try and understand this market. I hope we did a good job today in kind of breaking it down. I think we'll be talking more about this in the future with Ernie, but what's really important here is that at the end of the day, tokenization is not just a buzzword. It's practical, it's business oriented, it's evolving. Um, you know, in terms of asset ownership, capital formation, and liquidity, this is moving very, very quickly, and it's not going anywhere. Like I said, if it offers a better way of doing things, and it's faster, it's more accessible, it's transparent, and it's compliant. So engage, explore, don't be left behind, because, this is the next step in how financial transactions are done across the board. So, for the audience here too, as we wrap up, really at the end of the day, let's look at the key points. Okay. What is happening here is it makes a more inclusive financial system, and more efficient capital markets. Like we said, we're seeing traditional barriers to entry broken, so people can get into these markets much easier. Smaller investors, new asset classes, and what it's also helping with is the challenge of deploying new business models. Not just technology, this is very transformative. So, for smaller businesses, entrepreneurs that are, trying to get in the market the bigger way or raise capital, this opens up a lot more opportunities, and also for the investors. Um, and there's huge potential here, as we've already seen, billions already being transacted in real estate, credit, and private equity. But the other thing I really want to say, and I want to hammer this home, is that, you know, there's some misconceptions here, right? Tokenization is not unregulated. It's not a crypto gamble. It is highly regulated. And it's compliant at the enterprise grade. Um, it's not only for tech firms, it's actually a business model tool as well. And, another misconception here is that it's just hype. Yeah, and it's not. You can, go, I would say go online, do a little research on, the transaction levels that are happening in this market, and the key players behind it. And you'll see that, there's some of the biggest companies in the world there. So, once again, thanks everybody. And any questions, happy to answer them.
Neil, I want to say thank you so much for being a guest and explaining tokenization. And I'm not going to confuse it with token again, and especially you, the Knack for Business listeners. So, if tokenization, if kind of like you've heard about it, and you go, oh, now I understand a bit more, or you're in the state where you actually want to deploy a token to set up an investment to have money flow into your coffers to help promote your business, build your business up and scale up, reach out to Neil. That's what he's here for.
To reach the podcast hosts, email them at info@creativeinsight.com or by the website creativeinsight.com, spelled KREATIVISIGHT.com. To reach Wayne at his email, wayne@motive8u.ca, that is MOTIVE, the numeral 8 and the letter u.ca, or his website, motive8u.ca. If you would like to be a guest on this podcast and share your knowledge, let us know. We would also appreciate your feedback on the content or format. Check the show notes for more details. For these podcasts, we like to acknowledge the support and thanks to the following people. Carl Richards from Podcast Solutions Made Simple, a renowned podcast expert. Fred Crouch, who is the Property Wizard podcaster, where Bernie is a co-host. Jovan Strika from At Hive, a co-working space that is more than just a space. Then Melanie Weber, Bernie's invaluable business partner, and Wayne Pratt from Motive8U Inc., who serves as both a coach and co-host of these podcasts. Disclaimer. Please note that the Knack for Business podcast episodes are meant solely for educational and general informational purposes. The information and opinions contained within are not intended to be professional advice on any subject matter. The thoughts, views, and opinions expressed by the participants are their own personal beliefs and do not represent the views of the podcast hosts or any affiliated organizations. It is important to note that this podcast is not a replacement for consulting with certified experts in your area who possess knowledge of your unique situation. The hosts of the podcast along with any participants or affiliated groups, do not take responsibility for any actions taken or not taken based on the information presented in this episode. It is highly recommended that individuals seek guidance from their own personal advisors in fields such as accounting, law, or other pertinent areas prior to undertaking any actions or making decisions that may impact their financial, legal, or other aspects of life.